Imagine an ingredient so small, so unremarkable, that most people have never heard its name, yet it's at the center of a multi-billion-dollar global power struggle. No, it's not oil or rare earth metals or even microchips. It's a simple amino acid, L-lysine. And right now, it's on the front lines of a brewing trade war that could shake what ends up on your dinner table, and maybe even your wallet. How did a powder added to animal feed become the pawn in a new battle between the United States and China? Why are trade lawyers, farmers, economists, and diplomats all holding their breath over the price of a single feed additive? And, crucially, could a fight over lysine end with higher food prices, lost jobs, or even more retaliation between the world's two largest economies? Stick around, because this is a story about what happens when a seemingly invisible product becomes the epicenter of global tension, innovation, and opportunity. The next chapter in the US-China economic rivalry isn't about the latest smartphone or a new EV gigafactory. It's about the proteins that build the world, starting with a tiny molecule in your breakfast eggs. Before we dive into the brewing conflict, let's first understand what lysine actually is, and why it suddenly matters so much. Lysine is an essential amino acid, the building block of proteins. But here's the catch. Neither humans nor most animals can make lysine on their own. It has to be added, specifically to animal feed. For pig, poultry, and even aquaculture feed, lysine is the supercharger that makes sure animals grow efficiently and produce more meat, eggs, or milk. In modern agriculture, it's simply not optional. So, how is lysine made? The answer is pretty high-tech. Most commercial lysine is produced in giant fermenters, using specific strains of bacteria pumped full of glucose. The result is a range of products: liquid, base, lysine, lysine monohydrochloride, known as lysine HCl, lysine sulfate, and coated or encapsulated lysine. Each form is designed for a particular animal or feeding process, fine-tuned for maximum nutritional value. But here's where it gets interesting. While the science is complex, the economics are even more so. The global lysine market is projected to reach $8.92 billion by 2032. That's more than the GDP of some small countries, all tied to a single input in animal agriculture. Right now, China is the undisputed heavyweight in this industry. As of 2024, Chinese producers control more than 70% of the world's lysine supply. The United States, by contrast, is both a major consumer and a shrinking producer. In fact, the U.S. imported nearly 78,000 metric tons of Chinese lysine last year, worth nearly $96 million. For consumers, these numbers might seem abstract. But for the U.S. livestock sector, lysine is a lifeline. It directly impacts the price and availability of pork, chicken, eggs, and even fish. And at global scale, a mere 20% swing in lysine prices can jack up pig feed costs by $5 to $10 per ton, a significant hit in an industry where margins are razor thin. So how does a product most people can't even name turn into a flashpoint for global economics? It starts with competition, a story as old as trade itself, but with a 21st century twist. The U.S. L-lysine industry, led by the Lysine Fair Trade Coalition, claims that Chinese producers are playing unfair. Their allegations: Chinese lysine is being dumped in the U.S., sold below its cost of production, and propped up by massive government subsidies. The numbers are dramatic. The coalition pegs the dumping margin, that is the difference between the fair price and the import price, at an eye-watering 197.1%. In their petition to the U.S. Department of Commerce and the International Trade Commission, they argue that these practices are not only undermining American producers, but also threatening to destabilize the entire feed and livestock industry. But what exactly is dumping? In trade law, dumping happens when a country exports a product at a price lower than it charges at home, or even below cost. It's seen as predatory, a way to push out foreign competitors before jacking up prices later. To counteract this, countries can impose anti-dumping duties, basically special taxes that level the playing field. In May 2025, the U.S. industry made it official. They filed a petition calling for both anti-dumping and countervailing anti-subsidy duties on Chinese lysine. The response was immediate. The Department of Commerce and the International Trade Commission both launched investigations, examining whether U.S. producers are being hurt, and if Chinese exporters are in fact selling lysine unfairly. The stakes? If U.S. authorities agree with the domestic industry, importers could face tariffs backdated to the initial filing. The first key deadline, a preliminary determination by the ITC, set for July 14, 2025. If they find that imports are harming U.S. producers, the next step is for the Department of Commerce to calculate just how big those new duties might be. But the story doesn't stop there. China's dominance in lysine isn't an accident. Over the past decade, it has invested heavily in biomanufacturing, scaling up production, cutting costs, and, some claim, offering subsidies that foreign producers can't match. American manufacturers argue they simply can't compete when prices are this low, unless trade officials intervene. It's not just a U.S. problem either. In May 2024, the European Union launched its own anti-dumping investigation into Chinese lysine. Suddenly, the world's biggest producers and consumers are drawing new battle lines, a reminder that the rules of globalization are being rewritten, molecule by molecule. Still, not everyone agrees on what should happen next. Some experts argue that tariffs, while designed to level the playing field, often have unintended consequences. Tariffs on imported goods ultimately translate into higher costs for consumers, warns Ethan Harris, head of global economics research at Bank of America. If duties are imposed on Chinese lysine, U.S. feed manufacturers could see their input costs jump, potentially hiking prices for pork, poultry, and eggs at your local supermarket. Others fear escalation. Chad Bown from the Peterson Institute for International Economics spells it out. Trade cases like this can escalate trade tensions and lead to retaliatory measures. If history is any guide, China could strike back by targeting U.S. agricultural exports, soybeans, corn, or even beef. Suddenly, what started as a squabble over lysine threatens to spill over into a wider economic confrontation. And for livestock producers, the risks are immediate. David Hegwood, a feed industry consultant, notes, duties on L-lysine will increase feed costs for pork and poultry producers, impacting profitability. That's no small issue for farmers already squeezed by tight margins, labor shortages, and volatile commodity prices. For perspective, a 15% increase in lysine prices during the first quarter of 2025 has already squeezed profit margins across the livestock sector, even before any new duties are imposed. There's also the risk for U.S. global competitiveness. Jim Sumner, president of the USA Poultry and Egg Export Council, warns, increased input costs will make U.S. poultry less competitive in global markets. With American producers already fighting for market share abroad, any added cost could tip the scales in favor of rivals, maybe even Chinese ones, given their lower input prices. Yet proponents of duties say the risks of inaction are even greater. They argue that if Chinese dumping goes unchecked, U.S. lysine production could vanish entirely, leading to even more dependency on imports. Angela Zhang, a trade lawyer specializing in U.S.-China disputes, observes, these cases are becoming more common as the U.S. seeks to address perceived unfair trade practices. For some, the time to act is now, even if it means higher costs in the short term. At the heart of all this is the fundamental question. What's the right balance between protecting local industry and keeping inputs affordable? Should the U.S. risk provoking retaliation to defend its own producers? Or does the threat of higher food prices and potential trade war outweigh the promise of corrective duties? It doesn't help that the rest of the world is watching closely. With the EU's own investigation underway and the global lysine market on the verge of $9 billion in annual value, any decision here could ripple far beyond American borders. Tensions are rising, and every stakeholder, from feed mill managers in the Midwest to trade negotiators in Beijing, knows that the stakes are about much more than amino acids. As Darcy Vetter, former chief agricultural negotiator at the U.S. Trade Representative, puts it, the case highlights the ongoing tensions in agricultural trade between the U.S. and China. So, what happens if the U.S. does impose steep tariffs? Could China retaliate? And what would that mean for American farmers and families? Or is there a way to resolve this standoff without spiraling into a new trade war? As the deadline for the ITC's decision draws closer, the entire global food chain is holding its breath. The battle over lysine is about to reach its tipping point. Will both sides double down, or is there a hidden off-ramp that could spare everyone from the fallout? As the United States moves forward with a decision on steep anti-dumping and countervailing tariffs against Chinese L-lysine imports, the world is watching. This isn't just a matter of a single ingredient or a battle between two countries. It's the latest flashpoint in a much broader struggle that will shape global food prices, agricultural trade, and ultimately, your grocery bill. So, what exactly could happen next? Let's dive into the possible futures that lie ahead and what they mean for everyone, from Midwest farmers to international shoppers. First, picture the scenario that many U.S. producers are hoping for. The duties are imposed, Chinese imports become much more expensive, and American factories ramp up production. On the surface, this sounds like a win for domestic industry, but reality is rarely so simple. According to Chad Bown from the Peterson Institute for International Economics, trade cases like this can escalate tensions and lead to retaliatory measures. If the U.S. slaps a nearly 200% tariff on Chinese lysine, it's almost certain that Beijing won't take it lying down. China has a powerful playbook for such moments. Just ask U.S. soybean growers, who watched their exports plummet during recent trade skirmishes. John Bays, a leading agriculture trade consultant, warns China could retaliate by reducing purchases of U.S. soybeans, corn, and other agricultural products. That's not just a headline, that's billions of dollars and thousands of jobs on the line, especially in the heartland states. With China commanding over 70% of the global lysine market and the U.S. recently importing nearly 78,000 metric tons in 2024 alone, the stakes go far beyond lysine. The entire feed and livestock supply chain is tangled up in this dispute. Let's consider the domino effect. Tariffs mean higher costs for American feed millers. David Hegwood, a veteran feed industry consultant, spells it out. Duties on L-lysine will increase feed costs for pork and poultry producers, impacting profitability. It's not just a minor blip. In Q1 2025, even before any duties had taken effect, the price of L-lysine jumped 15%, and experts say a 20% spike could raise pig feed costs by $5 to $10 per ton. Multiply that by millions of tons, and the impact on pork, chicken, and egg prices becomes impossible to ignore. Ultimately, you and I could see the results at the supermarket. Ethan Harris, head of global economics research at Bank of America, notes, tariffs on imported goods ultimately translate into higher costs for consumers. But the ripples spread farther still. U.S. poultry and pork producers, already squeezed by higher feed prices, become less competitive in global markets. Jim Sumner, president of the USA Poultry and Egg Export Council, sounds the alarm. Increased input costs will make U.S. poultry less competitive in global markets. Overseas buyers may look elsewhere for cheaper meat or for other protein sources altogether. And this isn't just a U.S.-China issue anymore. In May 2024, the European Union launched its own investigation into Chinese lysine shipments, signaling a potential global backlash. If both the U.S. and EU clamp down, Chinese producers may look for other, smaller markets, or flood the remaining open ones, sparking price swings and uncertainty everywhere. Yet the world of trade is never entirely predictable. There's also the chance, however slim, that cooler heads prevail. Angela Zhang, a trade lawyer who has helped resolve multiple U.S.-China disputes, explains, these cases are becoming more common as the U.S. seeks to address perceived unfair trade practices. Often, they end not in all-out economic warfare, but in a negotiated settlement. China agrees to curb some of its subsidies, perhaps limits exports, and the U.S. gets enough concessions to call off or reduce duties. It's a diplomatic dance, but one with real-life implications for farmers, feed makers, and families. But what about innovation? In moments of crisis, new ideas often rise. Should tariffs go through, some feed manufacturers may look for alternative suppliers, Europe, Brazil, or Southeast Asia. Others are experimenting with tweaking animal diets, reducing lysine content, or using novel protein sources, with mixed results. This could reshape the entire animal nutrition industry, driving new research and investment, but with uncertain impacts on animal growth, productivity, and eventually, food quality. Let's pause for a second. What does this all mean for you, as someone buying food, working in agriculture, or just interested in the machinery of global trade? First, it's a powerful reminder that the everyday products we depend on, eggs, chicken, pork, are built on a vast, intricate web of global supply chains. A single change in tariff policy can send shockwaves across continents. Next time you walk through a grocery aisle, the price tag on a carton of eggs or a pork chop may have been shaped as much by diplomatic negotiations as by the weather or feed quality. There are crucial lessons here for consumers, investors, and business owners alike. If you're a farmer or part of the livestock industry, being proactive is key. Keep tabs on evolving trade policy. It could affect your input costs, your competitiveness, and your bottom line. Now may be the time to explore alternative feed formulations or diversify supply sources, hedging against price spikes or shortages. For the nimblest producers, adapting early could be the difference between profit and loss. For consumers, Understanding these trade tensions gives you context for rising food costs. Instead of blaming one group or another, realize how connected the world really is. Advocacy for transparency in global supply chains and support for local producers can make a small but meaningful difference. For policymakers and investors, the L-lysine saga is a sharp illustration. Supply chains can no longer be taken for granted. Geopolitical risk, regulatory change, and sudden market shocks are the new normal. Diversifying supply, investing in domestic production technologies, and building resilient supply chains will be central themes of the next decade. Of course, this all fits within the wider story of U.S.-China economic relations. Darcy Vetter, former chief agricultural negotiator at the USTR, captures it perfectly. The case highlights the ongoing tensions in agricultural trade between the U.S. and China. These battles are about much more than molecules of lysine or the fate of a handful of factories. They're about the ground rules of modern globalization. So, circling back to our original question, as the U.S. moves toward imposing new tariffs, what comes next? Will this trigger tit-for-tat retaliation, a global price shock, or a last-minute negotiated truce? Here's the honest answer. We're likely to see a little bit of all three. If history is any guide, tariffs will be imposed at least temporarily. Prices for lysine and downstream for pork, poultry, and eggs will rise, forcing producers and consumers to adjust. China may well retaliate, squeezing U.S. exports of soybeans and corn just as the market settles from past trade wars. The threat of prolonged disruption could finally bring both sides to the table for a compromise, if not in the next few months, then when the pain becomes clear for farmers and consumers on both sides of the Pacific. But there's one secret detail most people miss. These trade battles don't just reshape prices, they accelerate the search for alternatives and innovation. When faced with high costs or unpredictable supplies, people adapt. The feed industry is already quietly investing in research to use less lysine, source it from new places, or even develop synthetic substitutes. The challenge the U.S. and China face today might spark the feed revolution of tomorrow. The outcome of this latest skirmish will echo far beyond the world of amino acids. It may set patterns for the next chapter of global agricultural trade, one where resilience, adaptation, and negotiation matter more than raw price alone. So, what can you do? Stay informed. Watch how these decisions ripple through the supply chain. Support calls for transparency and fair competition, whether at the ballot box or with your wallet. And remember, the forces shaping your dinner plate are as much about diplomacy and economics as science and farming. If you found this breakdown useful or eye-opening, subscribe and hit the notification bell to stay updated on the big stories shaping our global food and trade system. Leave your thoughts and questions in the comments below. What do you think will happen next in the U.S.-China lysine standoff? And if you want to discover more hidden ingredients shaping our daily lives, let us know what topics you'd like